Hello again. My name's Jim Wade. I'm a tax attorney here in Maine, and I'm going to be talking about, I think this is our fourth episode on innocent spouse relief, and we'll be talking about the allocation of tax liability. Often, the whole concept of innocent spouse is rather um, vague, hard to really get your mind around, and some people actually believe that it provides more relief than it actually does. So it's not a get out of jail free card for any tax debt. There usually is an allocation that's done. So you potentially might not get full relief from your joint tax liability. And each different type of relief has its own sort of system for figuring that out. So that's the goal for today, is to try to make it as clear as possible. And if at the end of this you're confused, don't worry. I still have to sit down and reread the rules every time, but I'm going to try to at least give you an idea how each works and how liabilities may be divvied up. So we'll start first with innocent spouse relief, the traditional innocent spouse relief, where you and your spouse file a joint return, and later you could be married, divorced, separate, doesn't really matter. But later there's an understatement of tax that arises due to an erroneous item that is attributable to the non-requesting spouse. Um, in that particular case, if you request relief under 1615B, as they call it, if there's a deficiency of tax, anything that is related to an erroneous item on the return, and we'll go through an example in a moment, that's the tax, interest, penalties, those sorts of things, that you will be relieved of, as far as you will no longer owe for it. There are some other things that are involved too to get complete relief. As far as from that deficiency, you have to show that you had no actual or constructive knowledge of this erroneous item and that it would be unfair to hold you liable for it. But if you can sort of meet those requirements, then you will no longer owe for that deficiency. So just a quick example, let's say you are unaware that your husband has omitted income from his business. Later, there's an audit and it results in a $15,000 deficiency, which is the tax, penalties, interest. If you can prove that you qualify for innocent spouse relief under 1615B, you would not owe for that $15,000. So this is the first type of relief. This is pretty straightforward. Things get a little bit more complicated when we start talking about separation of liability. So here, under separation of liability, it's similar to innocent spouse in that, there is a deficiency that's based on an erroneous item that is, that's attributable to your spouse. Now, in this particular case, you have to be divorced, separated, or deserted by your spouse. But if you meet the requirements, the deficiency will be allocated between you and the non-requesting spouse as a percentage based on, if you were to file two separate returns, how would these items that were giving rise to this deficiency, who would be paying tax on it? I guess the best way to say it is just pretend that you and your spouse filed separately, whose item of income or expense which gave rise to this deficiency, who would normally have it on their return. And if it's not you, then it'll be allocated to the other spouse. Now, if you have something that's allocated to you, then of course you cannot get relief from that part of the deficiency. But the idea is that they're going to come down to some sort of percentage and then times that, the deficiency that's owed. So if you have an allocation of a third and it's $100,000, then you would still be liable for like a $33,000 tax debt. So just quick summary of that. You would have a deficiency that's related to an erroneous item. You would put forward how items of income and expense would be allocated between you and your spouse, sort of as if you're filing separate returns, and it would come up with a percentage deficiency times percentage equals what you're relieved from. Here's just a quick example. So if you have a divorced couple and you're both later audited, if there's a $150,000 deficiency as a result of $100,000 of unreported income, which is attributable to your husband's sale of stock, and you yourself had a $50,000 deficiency related to a denied casualty loss, then you would get relief basically as a third of the total deficiency, or $100,000. As clear as mud, as they say. Oftentimes, with separation of liability, it's sort of a game of figuring out who gets what as far as filing separate, and then providing that to the IRS to sort of prove up the allocation. It can get very complicated. The last form of relief, equitable relief, it is similar to innocent spouse relief. Just the same as before, if there is an erroneous item attributable to your spouse, you could get relief from that item. But it also includes getting relief from underpayment of taxes. So let's assume that there's an erroneous item, just as a reminder, is unreported income or an improper deduction, credit, or basis on the return that gives rise to this deficiency. But you can also, under equitable relief, have a return where there's absolutely nothing wrong with it, just that there is not enough withholdings or estimated taxes paid to cover the balance due. So when the return's filed, hey, there's a big balance that has to get paid. Well, under equitable relief, you might be relieved in whole or part of the liability based on the fact that your spouse should have paid those estimated taxes and would have covered the liability. And there's other circumstances. It can get quite complicated, but you could be relieved of your underpayment of taxes on a return. Now, in innocent spouse relief, you can only be relieved of something that is sort of related to the other spouse. But there are circumstances in equitable relief where you might also be able to get relief from a tax that is, a deficiency that's related to you. So let's say you have an asset where you have nominal ownership, meaning your name's on the title or your name's on the account, but you yourself don't have any control, maybe even knowledge of it. You can have a situation where you actually own an asset, but your spouse has stolen or misappropriated, either stolen the asset or stolen the proceeds from a sale of an asset or the income that's generated by an asset. Doesn't matter. If it's misappropriated, you might be able to get relief from that. And finally, in cases of abuse. I threw an example here just to make a little bit more sense about nominal ownership. So there was a case where a wife had an account that was titled in her name, but her spouse set it up without her knowledge, and he was trading commodities futures through it. And he just didn't report the income. So she would qualify for relief. Just as an interesting side note, apparently later she kind of found out about it, didn't say anything to the IRS. So that's why it ended up being a case, because the IRS was saying, well, yeah, she didn't know about it, but she did certainly, when she found out about it, didn't tell anybody about it either. So I guess they were trying to hint that maybe she knew more than she let on. Anyways, those are how taxes are allocated in a situation where, under the various types of relief that you could request. Certainly, it's not the easiest thing to figure out, but it's very helpful in understanding, because in the next episode, we're going to be talking about, when should you request relief or do something different? Because there are situations where innocent spouse relief may not be the best way to handle your IRS tax debt. All right, with that, thank you so much. Contact us if you have any questions. Have a great day.